All right, good morning, everybody. My name is Jim McDonald with Torrey Hills Capital. Pleased to be hosting today's call featuring CoTec Holdings, a technology and resource extraction company fundamentally changing the method by which minerals are extracted, processed, and utilized through the application of disruptive technologies. Company trades in the US on the OTCQB under the ticker symbol CTHCF. Also up in Canada on the TSX Venture Exchange under the ticker symbol CTH. And joining me today from the company, I have Braam Jonker, the company's CFO, and Eugene Herken, company's VP of Finance and Corporate Development. Before turning over the call to both Braam and Eugene, want to go through logistics fairly quickly. Nothing new here for those who have been on calls with me in the past, but just a quick reminder. Our webinars are intended to replicate our in-person meetings, which we like and encourage to be as interactive as possible. With that in mind, if you have questions along the way, please feel free to ask them. The best way to do so is use the navigation pane at the bottom of the screen, click on the Q&A or the chat button. We'll get those answered for you. If for some reason we don't get to your questions immediately, it's not that we don't see that or are ignoring it. It's just simply that we know that the questions are going to be answered in the next couple of slides, and we're going to let the normal course of the presentation answer those for us. Alternatively, if you want to speak with Braam or Eugene at any point during the presentation, we also encourage that. The best way and actually only way to do that is, again, use the navigation pane, click on the raise hand button. We will see that. We can unmute your microphone and allow for direct conversation back and forth. As with all of our webinars, I will remain on throughout, but remove myself from both video and audio so as not to be a distraction. With that said, you've got a good story coming up, and so enjoy the story, and I'll turn the controls over to Braam and Eugene.
Thanks for the introduction there, Jim. So, Eugene, if you could maybe just bring up the slides there.
Should be coming up right now.
All right. Okay, why don't we go to the first slide?
Oops, one moment. The computer's thinking. There we go. Okay, there you go.
All right, thank you very much. And look, I do apologize if my voice starts sounding a little bit awkward halfway through the presentation. We're all sort of recovering from colds that's doing the rounds here in Vancouver. So the CoTec concept actually came about 3 years ago when we started the company out of the belief that the resource industry in its current form will not be able to meet the future demand. And that's the one critical aspect. And the second thing is we have a situation where China controls the majority, in most instances, more than 90% of the supply chain for the critical minerals that we need here in the West for the energy transition. So that was sort of at the forefront of our minds when we decided to form CoTec. So what CoTec does is it essentially take minority investments into disruptive technology in the extraction industry, the mining industry, and those technologies need to meet certain criteria. One is that they need to be sufficiently developed and advanced that they are close to commercialization so that we can have a short period from investment through to monetizing the technology. The second thing is that it needs to be disruptive. The third aspect is that we need to be able to scale that up and to apply it to numerous different projects. And then finally, it needs to be environmentally friendly. So we look at power usage, we look at carbon emissions, water usage, impact on the environment, etc. So that's sort of roughly the criteria that we're looking for. And then also what is key to us, like I've mentioned earlier, is that there needs to be a relatively short period from when we invest till when we can start monetizing this. So in order to achieve that, the main focus then is on resources that has already been mined. Essentially, it's like we say in CoTec, we need to start mining what's already been mined, and in order to do that, the focus is then on reclamation projects, recycling projects, marginal operations. And what we then achieve through that approach is very important. There are three aspects. One is that it significantly lowers the capital requirement in order to develop these projects. Secondly, it significantly shortens the period from identifying the project through to cash flow generation. In traditional mining these days, especially if it's a large project, you're looking at time periods of around 15 years, in some instances even more, from when the resource was identified through to when it's finally up and running. In CoTec, that target period, we've reduced that to 3 to 5 years. And you will see later on in our discussion that we are actually starting to hit that time frame of 3 to 5 years, which in the mining industry is absolutely phenomenal. And then the third significant benefit that we get from this approach is that we have a very high barrier to entry due to the fact that we are applying technology that is protected through patents, through registered patents, so other people don't have access. The final comment I want to make in this introduction is that we are focusing on the United States and its allies, essentially the Western world, including Australia. That's where our focus lies, because we are in our strategy, we are trying to assist in alleviating the challenges around the supply chains for critical minerals for the West. Eugene?
Hey, Braam, if I can interrupt, there's a question that came in.
Yes.
The question is, are recoveries any higher?
It's very difficult to it's difficult to compare. I mean, I think what the question should be, are the recoveries higher than what you see in ordinary mining projects? Now, bear in mind where our focus lies. Our focus is on the reclamation projects, it's recycling projects, and it's marginal assets. So from the marginal asset perspective, the recovery will definitely be a lot higher. And we are also, especially the Sabo technology, for instance, will allow us to unlock value of assets that under conventional technology is not economically viable. So in that respect, the answer is definitely yes. But when it comes to recycling, for instance, our technologies are definitely far more beneficial than what the competitive technologies are. So, but coming from a mining background, recoveries, you have to compare apples to apples in order to get a definitive answer around that. But like, for instance, our hypermag technology, and I'm going to get to that, that's extremely it's extremely unique. There is nothing like that in the world. So I don't want to compare that with a long loop system, because we are such a superior technology. And in that instance, we are recovering almost all of the material that's there. So I don't want people to simply just look at recoveries as the sole measure. But the short answer would be, in every respect, we will be far more superior than the other technologies or methodologies that are out there. Okay.
Terrific. Thank you for that. And I'll let you continue on.
Yes, so we have to date, we have invested, or we have reviewed around 300 technologies, and we've decided to invest in only 4 of them. So We are highly selective in our approach. And confirming what I've said earlier, what we currently have, we have 4 investments, but we also have 2 projects, and one of the investments is sort of sitting in between project and investment. But we already have 2 projects that are in evaluation stage, which is phenomenal for a company that was only formed actually less than 3 years ago, 2 years and 10 months as we speak. And it's on those 2 projects that I'm going to focus, because that is where the real value lies for CoTec, is in those projects. CoTec intends to become a mid-tier not a mining company, but a resource producing company, because we are different. I'm using different terminology. We want to become a mid-tier resource producing company, and we'll do so through our portfolio of investments that then gives us access to that technology in order to go and apply that. So my focus today, I'm going to briefly touch on all the technology investments, but my main focus is going to be on the 2 projects, because that's where the significant value for CoTec lies. And the first project that I want to focus on is Hypromag USA. So what Hypromag is, it is a recycling of rare earth magnets. Now, the rare earth industry is controlled almost 95% by China, including the manufacturing of the permanent magnets. Now, these permanent magnets are absolutely vital for us here in the West. We use them not only in the defense, where for obvious reasons it's extremely important. We use it for robotics. We're going to use it for AI. We use it for electric vehicles. We use it in your current vehicles. We use it in household appliances. It is just everywhere. And what the Hypromag technology does is it uses hydrogen in order to dissolve these magnets, and then extract the powder. And we are in that process, we demagnify the powder, and then coming out, we have the recovered powder, which we then remagnify, and we produce a magnet from it, a new permanent magnet. So it's essentially an end-to-end process. It's what we call a short loop process. It was developed by the University of Birmingham out of the United Kingdom at a cost of roughly $100 million. And Magneto, of which we also own 21%. Magneto has already set up a pilot plant in the United Kingdom that is up and running. They are now looking at commercial rollout in the United Kingdom as well as in Germany. Those projects are underway in different stages. And both those projects have been supported by the UK government and the German governments, respectively, through grants. The project in the United States, we own 50% of that, and Magneto the other 50%. So because we also own 20% of Magneto, we effectively own 60% of the project in the United States, 50% direct, 10% indirect. Where we are with that project is we have completed an independent feasibility study on the project, which we announced at the end of last year. The project showed very, very robust economics. We've got a $260 million NPV on the project, applying the current depressed prices. But if we apply the forecast prices by Adamas, we get to a valuation of around $500 million. The project's got around $125 million of capex. And we are also open about the fact that we have approached the US government for support in the form of grants, and we'll also be approaching them in the form of other incentives. because this is such a critical mineral to the Western world, and the fact that we are an end-to-end recycler. We are also in discussions with major companies in the United States on the supply side as well as the offtake side. For confidentiality reasons, so I can't disclose names, but I think everybody in the audience will know who the main players are. So we are in discussions, and in some instances more advanced than others. So we are in discussions in order to close that loop as well. So just a couple of comments on the technology and why we decided to invest in this. The HyperMag HPMS technology, as it's known, and the HPMS stands for hydrogen processing of magnet scrap. The HPMS technology is the only what we call short loop technology in the world for the recycling of these permanent magnets. And the way that it works, and I'm going to really simplify it because I need to simplify it for myself. I'm a finance guy and not a technician or not a technical expert. Is the hydrogen reactor essentially looks like, I describe it as a large washing machine. And the way that it works, and I'm going to use the example of a mobile phone, even though this is not our main focus. But even my mobile phone here has got a little permanent magnet sitting at the back here. And the way that it would work is I would take my mobile phone together with 1,000 other mobile phones. I will put it in the reactor. I will close it up. And as long as the hydrogen can get access to that magnet that's in my mobile phone, I don't have to take out the magnet manually beforehand. The hydrogen, as long as it can access the magnet, it will dissolve the powder. And then within 6 to 8 hours later, I will have my mobile phone scrap coming out on the one side, and the recovered powder will come out on the other side. So it is an incredibly clean process. It's a hydrogen process. It is much, much shorter. The alternative is to use what we call a long loop process, which is a chemically intense process. For those people that don't know the rare earth industry, it's arguably, if not the most environmentally unfriendly of all the metals to work with. Then it's right up there with the top 2 or 3. So this is from a emission standpoint, this is just head and shoulders above any other technology that is available out there. And that's the attractiveness for us. We will be producing around 1,000 tons of magnets per year from the facility that we intend to build in Texas. We will also have 2 depots, one in Nevada and one in South Carolina, that will essentially be collecting scrap material for us. But we do intend to, over a period of time, also increase the number of facilities that we have in the United States. And our target internally, we think that we can produce within a period of around 5 years from now, if the source material is available, we could produce up to as much as 10% of the permanent magnet demand in the United States. That demand is forecasted to grow to 30,000 tons a year of magnets. But there is so much development on the front of AI and robotics that it could be that demand. In my personal view, is that demand could exceed 30,000 tons a year. Eugene, I think we've covered off HyperMag. I think the final comment there is that we are targeting cash flow by 2027, early 2027 for this project, which then falls within that 3 to 5 year framework that I've referred to earlier. And I think also finally, a final comment is, the audience would have picked up that, if even if we have a project of $250 million NPV at the current price levels, that gives CoTec $150 million US. Obviously, it's the pre-financing and pre-execution value, but it gives on at least on based on the study that was done, a value of $150 million US compared to our current market cap of only 50 million Canadian dollars, and cash flow generation by early 2027, which, like I said, is significantly shorter than the 15-year window that we're currently looking at. Eugene, have I missed anything there?
No, not from my perspective. I was going to suggest if you wanted me to play a quick 10-second clip of the technology, or just post the link so the viewers can watch the Hypermag video in its entirety later. I have it queued up, but we can move on if we're running short on time.
Why don't we post the link for that, Eugene? Thank you very much. The link is on our website as well. So for those that are interested, it would really just make it so much clearer for you as to exactly how this technology works, and how really significant this is. And like I said, it's already been supported by both the UK as well as the German governments. All of our meetings to date with the US government officials have been very, very positive. I'll be in Washington again next week. So I don't know, Jim, are there any questions at this point?
There are. So before you move on, so one comment, Eugene, if you want to send me that link, I'll be sure to get that to everybody after. And then there are a couple of questions for you. So going in the order that they came in. Is China's dominance due to having the minerals, or due to political issues here and in the West?
Okay, so China, and there was actually a very interesting article this morning on mining.com. I hope they give me credit for giving them some free marketing here. So China has actually started to position themselves to dominate the critical minerals, probably 10 years ago, if not longer. So they've gone around the world. They have invested and secured offtake from all but essentially the Western countries, Argentina, Africa, and they have targeted all of the minerals that's essentially needed for the energy transition, as well as the sort of AI dominated world that we're about to enter. And that covers, lithium, it covers rare earth materials, etc. And it's not just on the resources itself. I mean, they do have significant rare earths inside of China as well, but it's also on the processing side. And that's where they're dominating. Even most of the lithium in the world needs to go to China in order to get processed and converted from sort of essentially a powder or the concentrate into the lithium that you actually need. And they control roughly 95%. Some of it is 90%, some of it's 92, 93% through that entire supply chain that you have. And like I said, it's not just on the rare earth side, it's also on lithium. I think manganese is included in there. So that's just how it's evolved. To a degree, I think we in the West we were a little bit too slow out of the starting blocks, but I think certainly anybody that's on, or everybody on this call, will know how big an issue it is for the Western world, and the political support that's behind it. In the United States, that support, I think, is bipartisan. It doesn't depend on which side of the aisle you sit. I think most politicians understand how extremely critical this is for us to catch up to China, and do that literally over the next couple of years. you would have already seen in the lithium space the significant amount of government support that's gone into Lithium Americas, for instance. There's also Ioneer that's just got $1 billion from the US government, and on and and sorry, and on the rare earth side, we would expect the same.
Terrific. Appreciate that. Next question, and you sort of covered this, I believe, earlier, but if you want to touch on it, is anyone else doing this either in the US or elsewhere?
Jim, I do have to apologize here. Something just went wrong here with my mobile phone. It's actually coming up whatever I'm saying. So I do terribly apologize. I'm just going to switch it off here. I'm not sure what's going on. There you go. That's much better. For some reason, my system's got linked here. So, Jim, would you mind just repeating the question for me?
Yes. So is anyone else doing this either here in the US or elsewhere?
So there will be some long loop recycling. There will be recycling in Europe. There could be some form of recycling in the US, but not with our technology, no. The long loop recycling, like I said earlier, it's a chemically heavy process, and it also takes much longer than what our process takes.
And then the final question currently is where will the material come from?
That's actually why we're in a discussion with several large companies in the United States. Well, they're doing a similar thing in Europe. So it's essentially we need to establish that whole recycling network. So it will come from large data centers. That's a really big source of potential source of supply. There is also some of the other much larger companies in the vehicle industry. There is some in the aerospace industry. There is some, in the computer industry. So there is a lot of potential supply, and it is for us just to pin that down with these OEMs that we can actually then go in and secure the feedstock. Currently, most of the permanent magnets, sadly, is actually just being it essentially ends up in rubbish dumps. A lot of them get shredded. The ones that you will see in your computer, in the hard disk drive, those get shredded, which causes a big problem for the shredders because they are not demagnetized yet. They clog up the shredders, so for them it's a big problem. So we will be able to supply them with a solution. So that will be another source. So there is a lot of magnets that we can recover. So for us, the issue is just to go and negotiate with these owners before it gets discarded, with the owners of these magnets, and set up that supply chain for us.
Terrific. And then there's one final question that just came in. AQMS claims the best recycling technology. Are you familiar with them? It's Aqua Metals.
It's not my place to critique on other people's technology. All I can say is that I'm going to go back to the fact that we've reviewed almost 300 technologies. Obviously, not only a few of those would have been in the rare earth space, and we have chosen this one. We regard this as by far the most superior technology in the space, from a cost perspective, from an environmental impact perspective, from a time perspective. We just haven't seen anything in the industry that we think on a whole can really hold its own against this the HPMS technology from Hypermag. But I'm not gonna start critiquing other people's technology. Okay.
Nope, fair enough. And that's well, yeah. So I'll let you continue on.
Okay, so the second project that we have identified that we're also extremely excited about is a reclamation project in Quebec. It's called the Lac Chenin project. It is a iron ore tailings facility that's been there for many years. And when we went into this project, obviously we went into the project with a view of applying especially our binding solutions technology, which is a cold bonding technology. Again, what we regard as sort of the world leader in that specific space. But when we went and evaluated the Lac Chenin property, we realized that this project, I apologize, that this project on a standalone basis, even without the benefit of any technology, it's got huge potential. So at the middle of last year, we completed a drilling program there on only about half of the tailings facility. And on the back of that drilling program, we completed an independent preliminary economic assessment, a PEA study. And that PEA study indicated a value of just over $60 million again, on roughly $60 million of capex over a 10-year period. So what we want to do this year, early this year, is we're going to do another drilling campaign there with the intention of first of all firming up and improving our knowledge and confidence in the work that was done in 2024. And secondly, also to expand the drilling to the full size of the tailings facility, which we think may even double up what we're doing there and extend it up to about 20 years without any further significant capital investment. So this is really a significant project for us. We are currently, the intention is that we will be the sole owners. We've had very positive interaction and meetings to date with First Nations, with Investment Quebec, with the government of Quebec. There are one or two other critical stakeholders that we are yet to engage there. But where we are with this project is we'll do the 2025 drilling campaign, and then we'll complete a feasibility study on the back of that. And that could then lead to development in 2026 and again cash flow in 2027. But that, of course, is subject to support from all the critical stakeholders, as well as your permitting, etc. So it's a little bit earlier stage than the Hypermag project, but we're very excited about this. Again, coming back to our strategy of identifying assets and taking them into cash flow within 3 to 5 years. Now, we are looking at enhancing this project even further through the potential application of the BSL technology, which is essentially a cold bonding pelletizing technology. And secondly, we're also looking at two other technologies, one on the energy side and the other one on the recovery of the ultrafines, that could also, subject to positive results there, could also significantly improve the value of the specific project. So again, if I go back to the valuation is very important to us. You're looking currently at a $60 million valuation. If we were to extrapolate that to a 20-year project based on the full size of the tailings facility. I'm speculating here, but you probably could get to $100 million of valuation quite easily. That's US dollars, currently Canadian dollars, 140 million. Again, pre-financing, pre-execution, compared to a valuation of the entire CoTec company at this point in time of $50 million. Eugene, is there anything that I've missed there?
No, I would just maybe just to clarify, the permitting should be quicker than a standard greenfield process. So I don't know if you want to comment a little bit on that, just to make that clear, because it is a tailings facility. Site already exists and has been mined in the past.
Yeah, exactly. So, it's a lot easier because when you do a reclamation project, you are rectifying what was not done in the past. Whereas when you do traditional mining, if I want to apply for a mining project, there's a lot of environmental impact studies that needs to be done, closure cost estimates, closure studies. All of these things need to be done and have to be put in place. So all of that, of course, disappears when you do a reclamation project of this nature. I mean, there's still plans that needs to be presented. So and there's still permitting that's required. So we're not in any way implying that goes away. But there is a difference between going into undisturbed land versus going in and rectifying that which has been abandoned by the previous owners, because this is an abandoned site. So we are actually going to go in and do what should have been done in the first place. The final comment there is we will be targeting a concentrate that should allow us to get this project also classified as a critical mineral. I think it's 68% of iron content. That will get us there, and we're already very close to that margin. Jim, are there any questions on the Lac-Chenin project?
There is a question. I think it actually came from the Hypromag, and it talked about who the main end customers were.
Sorry, just repeat that for me, please.
It wanted to know who your main end customers were.
So those discussions are also ongoing. So again, in the United States, you have about 30,000 tons of these magnets that's required by the end of the decade, right? So there is quite a broad spectrum of potential customers for us. Again, I can't disclose specific names in this. We do sign non-disclosure agreements with everybody that we're in discussions with. So, but again, it could end up in the vehicle manufacturing industry. It could end up in your EVs. It could end up potentially in the defense industry. Could end up in the robotics industry. The offtake side, when you do a recycling project, your offtake side is actually the easiest part of the project. It's the securing of the input, and secondly, also making sure that your technology can handle all the different inputs. Those are your sort of key risk areas, and in both instances, we are, on the technology side, we are extremely confident. And like I said, we are focusing a lot of our time and attention on the supply side as well.
Terrific. I think that answers that question, and I'll let you continue on then.
Okay. So if I can just touch briefly then on the technology investments, like I said, this is not where the main value is going to come from. It's from these projects. In Magneto Limited, our our partner in Hypermac USA. We own 21% interest. I think it's 20.6% equity interest there. Binding Solutions, where we have about a 3% equity interest. Eugene, if you can just go to the next slide. Mag Iron is also, as the name implies, it's in the iron ore space. And what Mag Iron is, it's a reclamation project, so fits well within the CoTec portfolio. Even though we only have about 16% equity interest in Mag Iron, but it's essentially a iron ore concentrator in Minnesota. That concentrator, we bought it for cents in the dollar from a insolvency process. It's got a replacement value of several $100 million US, and it's also, most importantly, it's got feedstock that could extend that project for over 20 years. Where Mag Iron currently is at is they are currently doing the necessary studies, completing the necessary studies to then prepare for both financing as well as the restart of that concentrator. So, like Janine, we're very excited about Mag Iron, but like I said, the key difference for us is that we are indeed a minority holder in Mag Iron, and then also very excited about our investment in Sabo. Again, just a 3% equity interest there, but Sabo is in the copper space, and again, in line with the CoTec strategy, if we can identify assets where the Sabo technology can be deployed, that will be done on a joint venture basis between CoTec and Sabo, just like we have done with Hypermac USA, where we go in on a joint basis and we extract value. So what the Sabo technology will do is essentially we apply that to it's a heap leach technology that again takes assets that cannot be where the metal can't be extracted in an economically viable way, and turn those assets into high value assets. Any questions on the technologies?
No questions currently, but just a reminder for people that do have questions, use the navigation pane at the bottom of the screen, click on the Q&A, and we'll get those answered for you.
So Eugene, if we just stay on this page for a second here, a key question we always get is, so what is going to be the main catalyst here for CoTec over the next 12 to 18 months to 24 months, getting us to that cash flow? One, of course, is with Hypermac. We've completed our feasibility study. We've done so at the end of last year. We're now into the detailed design and engineering phase, which will be kicking off here over the next few weeks. Apologies. And then we'll also, in the second half of this year, hopefully be in a position to start construction on that project. There will also be the supply agreements as well as the offtake agreements with potential customers. Then that's on the Hypermac project. On the Janine project, you are going to see the outcome of discussions with all the relevant stakeholders to get buy-in from all the stakeholders. And also you will see the results of the 2025 drilling campaign, as well as that feasibility study. The drilling results should be out by the end of the second quarter of this year. And then we'll have the feasibility study coming out of that, which will take us into the permitting phase and construction of the plant that we'll be setting up on site there. So there's a lot of activity that's going to take place over the next 24 months. I know often investors are concerned, that we'll have a sort of an information drought. But that is sort of typical for projects that's going to take 15 years. Feasibility study alone can take 18 months, 2 years. And, there's not a lot to say around that. But in the CoTec environment, it's completely different because we are truncating that timeline. a lot of things needs to happen over a very short period of time. Eugene, next slide there for us. I've already discussed this, Eugene, so if we can just go on. Again, how are we going to finance our projects? That's a big point of discussion. Obviously, we want to minimize dilution at the CoTec level itself and limit that to as much as possible just to overheads. And there's a very good reason for that. We're going to get to that in a second. So how are we looking at financing it? Government financing at the forefront of our minds, especially the HyperMag project, which has already received, like I said, government support in Europe. So we're hoping to get a similar reception in the United States. There can also be some commercial debt that can go into those projects. There's always offtake agreements can come with some financial benefits, royalties, and then whatever is left, only that portion will be financed through equity. Any questions before we move on? I know this is always a concern for people.
Yeah, question. It's not related necessarily to the financing. It's more of a question, and I'll just read it to you. What's the allocation of focus between hypromag and lacginine?
Okay, so yeah, that's a very good question. So I'm gonna answer that in two steps. One is when the company started out, we focused 100% on technology. Then about a year ago, we switched over to focus on the projects. At this point in time, simply from where we are in the evolution of both projects, I'm probably going to say around 80% hypromag USA and roughly 20% lacginine from a management time perspective. But also bear in mind, please, that we are using consultancy groups in both these projects. So no doubt that if you ask me the same question in June this year when we kick off the feasibility study in lacginine, that might be 30% lacginine, 70% hypromag. So it's going to be quite fluid over the next 12 months. So I don't want to limit that to say 15-20% versus 80%. It's going to vary here as needed. But hypromag, simply because hypromag is slightly ahead of lacginine, that obviously takes most of our focus at this point in time. Okay.
And then the follow-up to that is the same question sort of regarding valuation of the company. How would you attribute that to each of the projects?
Well, I would say we actually get very little credits for the projects, and that's one of the key frustrations that we have. And we have a slide of that coming up. So if the person that asked the question, if it doesn't mind, I'm going to address that. I've got a specific slide on that, which I think is actually a very critical and very important question. So thanks for asking that, and I'm going to get to that in a second here.
Okay, then that's it for the questions currently, and
yeah. Okay. So here is the reason why we obviously want to minimize dilution. We have only 71.5 million shares outstanding. Of that 71.5 million, the management and the board of directors and the insiders, we own about 74. I think it's slightly over 74% now because we've bought about 500,000 shares in the market over the last sort of 6 months as well. So we own, I'm going to call 74 to 75% of the company. The CEO personally, together with an investment company that's related to the CEO, owns 49% of the company. Apologies, I own just shy of 11% of the company. Every single board of director member, I think barring one who's our latest director that we've appointed, And every single person in the team, including Eugene, we all own stock in this company. We've bought and paid for our stock. None of this is promoter stock that's been issued. We've invested heavily. Our CEO has invested probably close to $15 million of his own funds into this company already. I'm in for, not too far off the $2 million mark by now. So we are heavily invested in this company. And so any shareholder that comes along with us on the CoTec journey, you can know for certain that the board of directors and the management of this company are heavily invested. Their interests are 300% aligned with your interest, and we will protect that as much as we can, the value that we've created, and try to drive value for shareholders as much as we can. Okay, Eugene, the next slide. So this is where we come to the value allocation, and this is that last question that was asked of us, Jim. So this is probably the biggest frustration, I think, for companies like ourselves, is that we simply, at this point in time, don't get recognition for the value that's been created to date. So if you look at this graph on the right-hand side here, there you will see the market cap of CoTec. We're sitting roughly around $50 million, I think $45 to $50 million. But if you look at the value that's already been created, just the book value of our investments alone, together with our tax losses, already exceed just the market cap of the company. We're not even talking about our two projects, just the book value of our investments alone today. The tax losses that we have roughly $90 million of tax losses in the company from previous mining projects that the company was involved in. That goes back 12, 13 years ago. So just between our investments and our tax losses, we already significantly exceed the market cap of the company. There is, as far as we're concerned, no value of the Hypermag project attributed to the valuation of the company yet. And I'm going to remind you, 60% of $250 million, $150 million US, which currently converts to about 250 million Canadian dollars. And I accept and agree, pre-dilution, pre-execution. But even that, as far as we're concerned, is just, it's just an unrealistic valuation where we currently sit. And then on top of that, we also have the Lac-Janine project currently sitting at $60 million. We think that could be as high as 100 million over time, subject, of course, to positive results from the 2025 drilling campaign and the feasibility study. But none of that's been attributed to the value of the company yet. And that's why, as our board as well as our management, I mentioned earlier, in the last few months, we've bought over 500,000 shares of the company. I alone have bought, I think, almost 300,000 shares in the last 6 months in the market. Our chairman has bought 100,000 shares in the market. 2 of our directors each bought 100,000 shares in the market. So you just add it up. And this is the reason why we keep on buying. We are confident that the company is significantly undervalued at this point in time. And that's why we're putting our money where our mouths are. We believe in this company. We believe in our ability to execute on our strategy. We believe in our ability to provide investors with a significant return on their investment if they come in at these levels. Any questions there, Jim?
Yes, there's a question regarding, is there an expiration time period with any of the tax losses?
No.
Perfect. That was the only question from that slide.
Okay. There is the only distinction I need to make there is that it's the bulk of the losses are capital losses. So it's investment. It's essentially investments that were lost, and then a small portion of that I think maybe 10 or 15 million dollars is revenue. So is revenue losses. So there is a distinction. So if the company were to make a capital gain, let's say for example, we were to sell off our Hypermag, we get Hypermag USA up and running and we sell it for, $200-300 million. The first sort of, I think roughly $80 million of that could then be sheltered against the capital losses. And if we were to start making revenues in CoTec itself, the first $12-15 million, please don't take me to the last, cent here. I need to go back and get the precise numbers, but roughly $12-15 million of revenues would be protected by those losses. But for the investors that's got more of a sort of finance/tax background, they will know exactly what I'm talking about. You can't offset a capital loss against the revenue loss, a capital gain against the revenue loss, and vice versa. So there is that distinction. But for us, most of the value that we are creating is on capital account anyway, and not. I mean, obviously, we do hope to make a huge amount of revenue over the years. But if you take, for instance, our investments, we've already had significant gains on our investments, and those are all on capital account. Something like Hypermag USA, that would be on capital account. The Laxinine project, that would be on capital account. But the revenue that we receive from them in the form of dividends, management fees, etc., that would go on revenue account. Okay. I just want to emphasize again the difference between what we are doing and traditional mining. And this is coming back to what I've said earlier. We have to be able to move a lot quicker in the mining industry in order to meet future demand. And that's exactly what we're achieving through our approach here, where you have your conventional mining, the larger projects, 15 years, huge amounts of capex, a lot of red tape that they need to go through. Whereas with our strategy, we're trying to keep that within that 5-year framework, and you can actually see there, you'll see a little green arrow against the CoTec status. Thank you, Eugene. That's already where we are. We're already at project implementation for Hypermag. We have completed the feasibility study. With Laxinine, slightly behind that, we're still in that project evaluation phase. First phase of the evaluation done. Now, second phase of evaluation coming up later this year. And all of this that you would have seen, taking this company from concept 2 years and 10 months ago, we had a concept, to where we are today, 2 projects, one already in the implementation phase, one in the advanced evaluation phase, 4 technology investments. All of this was done by a very small team. There are essentially 4 of us. I mean, we do use engineering consultants. We use them fairly extensively, but all of this was achieved in 2 years and 10 months. And that's why we are so confident in the value that we can actually deliver to shareholders to get us to that point where we can start generating revenue by 2027. Any questions on this?
No questions currently.
Thank you, Eugene, for this slide. So this slide just sort of re-emphasizes and puts a little bit more meat on the bone from the previous slide. Like, again, project implementation. The audience can go through the slide deck if they want to read through it in a little bit more detail. This just sort of gives you a little bit more color and meat on the bone from our previous slide. Again, look at where we are from phase 1 through to past phase 4 in the space of 2 years and 10 months. Thank you, Eugene. So I have mentioned at the outset, we are a company that's focused on the Western allies. Our assets are in the USA. In Canada, we've got that investment in the UK through Magneto, with their UK and their German operations, of which we own 20%. And then we also have that Sabo technology investment. Sabo technology was developed and currently is being further advanced in Chile, which of course is the major copper producing country in the world. But we're staying out of the what's not on here is we're also looking at opportunities in Australia, but we are staying clear of jurisdictions where we feel that we won't have the same positive impact that we can have in the United States and its allies. Okay. Eugene, we can actually just skip the slide. The only thing I want to say on the slide is, despite the fact that we're a small company, we have an extremely experienced board of directors and extremely experienced management team. So CoTec strives to do things in the right way, and we are meeting sustainability goals. We are very well aware of it. And also the people that we associate ourselves are extremely credible parties. You'll see on that list there, again, you can go through it at your own leisure. We've got MinRes in Binding Solutions, Champion Iron, Mitsui, on Mag Iron side. We've got Audley Capital. In the Sabo side, you've got BHP Billiton. These are heavy hitters in the mining space. So and in order to be able to associate ourselves and be able to work alongside these people in potential investments, you have to do things the right way, and that's the only way that's acceptable for us here in CoTec. Eugene, you want to continue? So I think we have now. This again is just sort of the roadmap of what we have achieved and what we are setting ourselves up to achieve over the next 2 years. I think we have discussed this in detail. So again, the audience, when they get the presentation, please, go through this. If you've got any questions, please just reach out to us. I'm going to skip the conclusion slide because I've got something else to say. But Eugene, just go to our board of directors, please, for a second. I think it is just worth noting, the old saying, you'll be judged by the company you keep, right? So in CoTec, we've got despite our size, we've got an extremely senior board of directors, and I think this is sort of testimony to the fact that we believe we're on the right track. All of these directors, except for one, has already invested in the company as well. They're very supportive of the CoTec story because they know that we are setting ourselves up for significant success. Julian Traeger, our CEO, and also director and also the main financier to date behind the company. Julian is one of the most successful investors and entrepreneurs in the mining space. He's got a very extensive, highly successful track record, and CoTec is where he wants to focus his time on for the next sort of 10 years. And a great privilege and for us to be able to work with Julian in sort of executing on his strategy and his vision. Lucio Genovese, our independent chairman, he's ex-Glencore, again, highly credible individual with a very successful track record in the industry. He's also the current chairman of Ferrexpo, but also 40 years a veteran of the industry. Tom Albanese, who I think almost needs no introduction, the ex-CEO of Rio Tinto. He's on the technology side for us, giving us a lot of guidance and insight. Sharon Fay was the chief investment officer for Alliance Bernstein, one of the largest investment funds in the world. Then our latest addition to the board, of course, is retired Vice Admiral Bob Harwood, highly respected individual, also followed his very, very successful career in the US Navy with a very successful career in commerce. Um, and then if you go, he was actually the head of the Navy SEALs. If you go to the next slide there, Eugene, we also have Erez Ichelov. He was the head of business development for Traxxas. Again, 40-year veteran of the industry. Margaret Nerdy, who was the head of resource investments with Ontario Teachers, a very successful individual. And then also John Singleton, our chief operating officer. He's ex Rio Tinto. And then we also have on the advisory side, John McGaw, who was the head of innovation and technology for Rio Tinto, and then myself and Eugene. So you'll see it's an extremely experienced board of directors, extremely experienced leadership team, and really testimony to the CoTec vision that these people were willing to sort of come and join us on the CoTec journey. So just a few final comments from my side. Why do I think people should invest in CoTec? Why do I invest in CoTec? I've invested heavily. I continue to invest in this company. CoTec essentially for me is at the right place at the right time, right? We're not just another mining company. We're not just another resource extraction company. We're a company that's focus is on the critical minerals. We're a company that focuses and positions ourselves to try and contribute to solve issues that is really critical for the West and is for the West at this point in time. So that for me is the first thing. The second thing is the fact that I do believe that through our strategy, we are going to be able to deliver superior returns for our shareholders. You can see just from what we've already achieved to date, none of our operations are a $5 billion mining complex somewhere in the world. But, those assets are so competitive that there's almost no point for anybody apart from the top tier mining companies to even consider that. We're a company that's going to grow aggressively. We're going to have a lot more operations. They're going to be smaller. They're going to be more manageable. They're going to spread the risk a lot more than what you have in a high concentration profile where you only have 2 or 3 really valuable assets. Here we're going to have a much larger number of assets. So our risk is going to be spread over a much larger base. And it really gives where you currently stand. When you go back to that evaluation slide and you look at that in your own time, none of the projects, so little of the value that we've created to date is reflected in our stock price. So you really get the opportunity to come in at ground level with us and hopefully, look back in 3 to 5 years from now and really appreciate what we've done for you from a financial return perspective. So that's the CoTec story. We are more than happy to answer all of your questions. My contact details is available on all of our public announcements. If you've got any questions, please just reach out to me. If there's anything we can help you with, just reach out to us. We're here to walk this exciting journey with you. Any questions there, Jim?
Yep, terrific story. There's no questions now, and I see we're a little bit past our 1 hour mark, which is okay, and everybody's still here because it was very informative and they didn't want to miss anything. So, Braam and Eugene, I thank you. I thank the attendees for joining us today and for all the questions. I feel like you gave a good conclusion at the end.